Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. And it's true, and the rumors have been confirmed. So Saber Interactive is going to be sold by Embracer. So Saber Interactive and Embracer are parting away, are going now their own ways. And this happened all today. And yesterday, I already made a video about this, so telling you this is going to happen. And what did I also say yesterday? I said that I think if this is going to be confirmed, my friends, I told you yesterday that I think the stock is going to drop massively. And actually, this happened also today, 11.21% down. So that's a lot. That's a lot. So it's an absolutely new all-time low since 2018. So, and we broke through some very important support or resistance to the downside, unfortunately. So it really hurts actually to see this. And to be honest, guys, I'm expecting actually now Embracer to go even lower, maybe even to under 10 Swedish krona. So everything is possible. If we're going to look at the 5-day chart, one moment. Not biggest fan actually of. So at the 5-day chart today, yes, yeah, here we go. Here we see it. Basically, the stock actually went up when the news came out. The stock went up from 1750 up to 19, and then was sold massively. So some people were speculating, obviously, that when this news come out, that they're selling this because they're reducing their debt with this, that then the stock would go up massively. So under the speculation, and then some time was running through. Probably the news was getting more details, and then you see it ended in actually minus 11.2%. So kind of sad. And what is my immediate opinion? I would say, guys, I mean, the market decided to punish Embracer with minus 11.21%. So, and this is what I expected. So I think in the end, it sounds like good that they get some cash flow, that they get some money, that they can reduce the debt on the one hand, but on the other hand, I mean, they're really losing also a very important part of their studio. Also, a studio they were actually buying for double the price, if I'm reading all those numbers correctly. So overall, I have to admit, my friends, I don't really like it. So, and I know a lot of you also don't like it. So it makes, for me, the stock now definitely less interesting, the company less interesting. They're losing like 1/3, I think it was 1/3 of their projects. So definitely not so cool. So I mean, they're losing actually value, not getting just money to spend it on debt, to reduce that. So is this really cool? Is this really good? I don't know. So Embracer Group seizes all operations in Russia then as well through the divestment of selected assets from the operative group Saber Interactive. So Saber Interactive has a big studio in St. Petersburg, and this is now a possibility for them actually to also stop operating in Russia. And they are getting the purchase price of 247 million US dollars, and then they have, including assumed earn-out liabilities of 44 million US dollars. So this is including in the 247 million, as far as I understand this correctly. And the buyer is Beacon Interactive. So this is the new company that has been created by this person. So by the former CEO and Embracer executive founder Matthew Karch. So he created more or less this Beacon Interactive group, new lead in Florida, to simply buy for Saber Interactive. This is like the new parent company. So Embracer, here it's the sale, the deal, and again you get some more of this information. We can go through this as well, but I'm also putting you the link down below. So basically those are the studios that are leaving with Saber Interactive, and what assets will Embracer Group retain following the Saber divestment. So those studios, they seem to keep, but then also Beacon Interactive will have an option to acquire 4A Games and Sense Studios for a fixed price. That's kind of really weird. And this would then mean that actually here, according to my great friend Jason Schreier from Bloomberg that Beacon actually already has agreed for this to this deal with Embracer, and this would be then the price of 500 million, so they would get even a little bit more. So the list includes then Swedish holding company will also retain 14 games in development, including 2 joint projects with Saber Interactive, with a total value of around 48 or 49 million dollars. So the list includes the next AAA title from 4A games. I think that's Metro game. So I hope 4A games. I think is Metro, Killing Floor 3, well, important, and some other games. So previously announced AAA game based on a major license, and so I hope it's Space Marine, to be honest, and not Star Wars Kotor, because I don't think Star Wars Knights of the Old Republic will be such a great game. So putting you this article there in the description, I think it's important, and I really recommend you to read through this. Here also get more information of older articles, and then also the games industry biz articles, also very useful, very good resume from the whole deal. So please check this out as well. So in the end, they think like they're going to be all stronger and they can reduce the debt, but that's the question, if this is really going to be the case. Of purchase price, so here I can read it because I can't read those articles, those news articles. So of course I can't read them to you. So but here we see like the retained pipeline includes 14 games to a book value of around 0.5 billion Swedish krona, so 50 million more or less. And then you see again, so a bit describing which games this are those games that they retain. So transaction value, transaction in detail. Here again we see again the detail what I just said, what companies they're keeping and what companies they're going to let go. I mean, say Embracer is a huge holding. So all right, my friend, so I would say with this little introduction, and probably this has already been pretty long for you, I would say we're looking now at the presentation, and then we get a lot of more details.
Thank you, Einar, and welcome everyone to this morning's press conference or conference. I'm very pleased. The divestments of certain assets within Saber Interactive, which makes us to cease all operations in Russia. The divestments of selected assets are done with a purchase price of 247 million.
Sounds very sad, don't you think?
Which includes assumed earnout liability of 44 million. The buyer is a company controlled of Matthew Karsh, which is the company CEO founder of Saber Interactive and a major shareholder of Embracer, through his entity Beacon Interactive. Looking at why we are making this transaction and the strategic rationale for it, it reduces our geopolitical risk that has been a major issue for us the past years. We increase our focus around the retained key projects, development projects, key IPs, and key studios that will remain within Embracer. The transaction reduces our CapEx, OpEx, and the business risk related.
So operational expenditure and capital expenditure.
To the overall PC console games pipeline. I have to say it's a win-win solution for both parties, safeguarding many developer jobs. Because of the cash flow is immediately improved, it yields additional headroom to amortize debt.
I mean, is it a win for shareholders? The stock is 11% down, so is it really a win for shareholders, or are you telling us that you might have gone bankrupt if you wouldn't have divested, because you really need to divest? So that's the big question I'm asking myself.
Which improves financial flexibility. This is an important step in our journey to transform Embracer into the future. Looking at the key components of the transaction. Again, the purchase price of 247, which is made up of a promissory note of 203 million, whereof $65 million will be paid up until September, and the balance latest end of December 2024. The purchase price also consists of the absorbed earn-out debt obligations of $44 million. Then we have agreed additional consideration of up to $94 million if Matt would resell the business to certain conditions and certain time period. We have also given Matt the option right to acquire 4A Games and Zen Studios within a limited time period. Worth highlighting that the booked value is including the earnout liability is $112 million, and the option price is significantly higher than that. Also important to highlight that the license of Metro game series, the back catalog, and the current games, all the royalties are within PlayOn.
Yeah, that's good. Very important.
The absolute majority of the economic upside of Metro remains within Embracer, regardless of this option is exercised or not.
Very important for A games, I think.
Looking at the financials, the net sales representing of the divested assets represents 4% of the overall net sales of the group, and it represents 1% of the adjusted EBIT last year, or 47 million krona. The EBITDA minus capex is were the last 12 months 1,156 million in the divested assets, compared to a positive 204 in the retained assets. And looking at the capex number, it was over 1.4 billion in the divested assets and about 400 million in the retained assets. All in all, there is about 3,000 people leaving Embracer in the divested assets, and 800 people remains.
Mm-hmm. They stay.
The financial impact of the transaction. So net debt is reduced by around 2.1 billion SEK upon full payment of the promissory note. The cash earnout obligations will be reduced by 500 million SEK. Most importantly, or very importantly, capex will be reduced by around 1.2 billion at the annualized run rate. This includes the current or the agreed ongoing projects that we would have with the buyer. This means that we will be reaching the target of 5 billion in annualized capex in next financial year, starting April. But very important, even with this divestments, we are expecting a growth capex compared to the completion value of the releases we had the last 12 months, that were 3.2 billion of the released games, including the divested games coming from the divested assets. And now we are looking at the forecast to complete the games in next financial year. We see a significant growth post-transaction. At closing, the transaction is expected to create a non-cash net expense of approximately 6 billion, or representing approximately 9% of our equity on the pro forma adjusted basis end of December.
Mm-hmm. Okay.
The absolute chunk of that non-cash net expense is driven out of the goodwill that were generated by the acquisitions of Saber Interactive 2020. That is the absolute majority of it.
So what they paid.
And we are mentioning this in the press release today, that we believe that the geopolitical issues relating to Saber Interactive have significantly affected the realized value of that goodwill in this transaction. Also worth highlighting or mentioning that remaining goodwill of the retained companies is 6.1 billion, which I feel very strongly about, which is Tripwire, Aspire, 4A Games, Tuxedo Labs, and Demiurge. So looking at the studios,
Okay, now we get a nice overview. I think that's very important to look at.
We are retaining many very important companies. 34 big things in Italy, Aspire in Texas, Beamdog in Canada, Demiurge in USA, Shiver in US, Snapshot in Bulgaria, Tripwire in the US, Tuxedo Labs in Malmö, Sweden, and 4A Games and Zen Studios, however, they being under the option with the buyer. And looking at the retained projects, it's including 2 notable joint projects with the buyer. If you look at the full list of the retained projects, we see the next AAA games from 4A Games. We see also an unannounced AAA games that are early in concept phase and not being yet in full development. We see a previously announced AAA game based on a very major license.
Hopefully Space Marine.
We see a new AAA multiplayer shooter based on a controlled IP that is in full development.
Controlled IP.
We see a new AA game based
Marine.
on an Asmodee IP. We see a new AA game from 34 Big Things based on a bit controversial and iconic IP that we own.
Controversial.
We see Killing Floor 3 from Tripwire. We see continued development of the very successful Teardown game made in Malmö Tuxedo Labs. And on top of that, we see the full upcoming pipeline and back catalog from Zen Studios, Aspire, and Tripwire. Worth highlighting, for example.
I mean, he really tries to convince us, and this is also some sort of financial engineering, what's going on there. Because Matthew Card still is a major shareholder in Embracer. Now he has the special company, which acquires then Saber Interactive and also some of the divested assets or some other studios. Then on the other hand, some of the studios that might also have belonged to Saber Interactive, so it's a bit confusing. They still stay in Embracer, and then they have some projects where they going to publish them properly under Embracer, not under the new company. So it's extremely confusing. So financial engineering at its best. So, and they're obviously also telling us all the details.
From Aspire, I was very pleased last night to see that the new Star Wars Battlefront Classic they are releasing today seems to be well received by critics and on Steam.
Okay.
So with that said, I would like to hand back to Einar for Q&A questions.
Thank you, Lars. The first question comes from the line of Erik Larsson. Please go ahead. Your line is open.
Thank you, and good morning. So my first question is that we're on the Saber assets that are remaining part of Embracer. We know some of these upcoming releases and franchises that you just mentioned, but how would you describe them in general? Are the earnings we saw in 2023, were they driven by catalog? What are the growth prospects going forward and so on? Would be helpful to get some color there.
Well, obviously we are retaining a good pipeline of games that I highly believe will continue to perform. For example, looking at Aspire, I think they just recently had a successful release of Tomb Raider, the Tomb Raider first games. Today they have Star Wars. They have a very interesting pipeline for the future that play to their own strength. Looking at Tripwire, they are in the end of their development of Killing Floor 3, a very competent, sizable development team, alongside it with a very strong publishing team. And Tuxedo Labs obviously also had a good success bringing Teardown, sorry, to consoles end of last year. Zen Studios, I think, one of the leading companies.
Damn it, Lars, speak a bit more clear.
In the field of pinball games in the world. They have also a very interesting strategy for the future that they will continue capturing that market. So, in general, I feel very confident about the assets we are keeping.
Okay, and then my second and final question is just wondering if I guess you keep your ambition of getting down the net debt to 8 billion SEK.
8 billion Swedish krona.
Well, I think we talked enough about that, Eric, on the last quarterly call. But my ambition is to reduce the net debt, and I think this transaction would obviously, in the course of next year, reduce the net debt a bit. I think most importantly, it will immediately improve the cash flow of the operations that would give more headroom in our amortizations and more improve our financial flexibility. So I think that's very positive.
So this was an important part. So it's actually not even so much reducing the net debt. It's actually more that they get cash from it, because interest rates in Europe, etc. So it's still expensive to get cash and to get money for new projects. So now they're actually selling to get money for new projects. But who is buying actually? Saber Interactive is buying. But how is Saber Interactive buying? How is this new Beacon Interactive company buying? Is this now actually a company with different investors? Most probably.
As mentioned in the last quarterly call, we had a number of ongoing structured processes. This is the first transaction that is announced, and different processes might solve different things. But I think this morning's transaction is the first very important step into the journey into the future.
Okay, that's all from me. Thank you.
Thank you, Eric.
The next question is from Simon Jönsson. Please go ahead. Your line is open.
Lars, you said that you expect to reach the target capex with this transaction. Do you think you can be on that run rate, meaning around 1.3 billion as soon as the transaction closes, or will it take some time before you eventually get there, or how should we view that?
I think we would be there quite immediately at closing. I see. Obviously, the 1.2 billion is an analyzed number, but at closing, we would immediately reduce our capex, and then we have a number of joint projects with them. But I see that balance coming in balance quite straight away, I would say, in this instance.
All right, thank you. That's all for me. Thanks.
The next question is from Ali Naqvi from HSBC. Please go ahead. Your line is open.
Hi, good morning. Thanks for taking the question. Could you just understand the rationale in not selling the remaining parts of Saber Interactive, or why are Beacon not buying it, putting it another way? And then in terms of the timing of the deal, why is the cash phased so far out? Is there a specific reason for that? And then finally, first of all, when is closing expected, and will Mr. Garb still be involved in the wider Embracer restructuring process?
Interesting.
So why aren't we selling the rest of Saber? Well, why would we? My vision is to continue operating Embracer and our companies very successfully, and the companies we are retaining are cash flow positive, very successful. So, as I've been talking about in the course of the last 12 months, it is important for us to focus on making divestment that both solves our need to reduce capex and partially net debt in combination.
This sounds really like some financial optimization engineering. So still keeping some of the parts of Saber that gives them money and selling. Are they selling the good parts? That's not really clear here. It's not really clear.
Could have been solving our net debt situation way before this by selling our most cash flow generative assets. But that is not what we have done. We have been working very hard to get certain transactions through, and I'm very pleased to have this first announcement today. But that's why we're not selling all the assets. Now, the cash payment, obviously, Matt is a very skilled negotiator, so it's been a commercial negotiation between many parties, including me.
But what does this Matthew get out of it? I mean, for him, it must be a win situation as well.
I think the solution with the promissory note is acceptable to us. It would, in the course of the next 9 months, generate $203 million, whereof $65 million will come in installments up until September. So everything in this morning's transactions has been negotiated on and off, and I think it's well balanced, and I'm very pleased with that transaction.
Okay, we believe
now,
him.
Matt would obviously run this business that he's now buying. He will remain a significant shareholder of Embracer, and we have a few joint projects between us. Now, those projects are managed with other people between our groups. but Matt would obviously not have any management positions at Embracer. Neither do he have any board position at Embracer.
But we as shareholders lose elements.
Sorry, when you say closing was going to be expected?
Oh, sorry. Well, we didn't say that there's a few closing conditions, but I expect closing to be fairly soon. But I don't want to give full. I can't give full color on that.
Understood. Thanks.
The next question is from Rasmus Engberg, Handelsbanken. Please go ahead.
Yes, hi, good morning. Thanks for taking the question. I heard briefly in a Swedish interview where you talked about how you have secured the promissory notes exposure. Can you repeat that? I didn't pick all of that up.
Yeah, I feel very confident about the security we have on the promissory note. Obviously, we have 43 million Embracer B shares to start with. But then we also have a very good negotiated full security package over all the assets that the buyer is buying. So I feel good about the security for the promissory note.
And you said that Matt was expected to remain a long-term shareholder. He's not selling all his shares to fund this deal, or?
Well, that's his own words, and that's what he's been telling me.
Fair enough. The other question, just a detailed question. A previously announced AAA game based on a major license. Is that?
Imagine he would have just sold now some of his shares. No, I'm not saying that he did, but imagine this. Difficult, guys. Difficult.
Something that is quite far into the future, or is it something that is for the coming 12 months that you have retained?
No, I think that kind of game needs some deep love and respect. So without giving full color, I think it's some time left until that is released.
Okay, thanks.
The next question is from Nicolas Langley from BNP Paribas. Please go ahead.
Yes, hello, good morning, everyone. So maybe first question on the Beacon funding. Do you know if it's secured or not? So you said you feel very good about it, but is it secured already or not? Second question, so to come back on this comment on the AAA game based on major franchise, I think it's fair to say it's the Kotor remake. Is that right? And if that's the case, who will be in charge of the project now? Because I think it was transferred to Saber. And finally, I'm quite surprised to see that the book value of the 14 games you retained is only 500 million SEK, while it includes some major games. So any comment on that? Thank you.
So on the security note, I don't know if I fully understood your question, but again, we have full security over the assets that he's acquiring. And on top of that, we have 43 million shares as security. And so in general, I feel confident about the security over the promissory note. But also Matt's, I think most importantly, I feel good about Matt's ability to manage these assets. He's been a good entrepreneur for well over 20 years and knows these assets very well. So I hope and I'm sure he will be successful operating them. Now on your second question, you mentioned a license name there, and I'm sorry, but I have no further comments to that. On the first, the value of the games. Well, the buyer has been acquiring the rights to a number of games. We could still remain in a few instances publisher and continue invest slightly into those projects, but the actual rights will be with the buyer of the games, and that's what. Hence, we are moving a lot of capitalized game development to the buyer.
Okay, thank you.
The next question from Nick Dempsey from Barclays. Please go ahead.
Yeah, good morning. So for those combined assets, or the combined projects between the divested assets and the retained assets, is there a risk that you could need to pay away a material amount to the divested business in relation to those two projects, something that would be material in the context of this deal? Second question, are there any one-off cash charges related to separating off this business that Embracer will have to bear that we haven't mentioned here? And third question, you talked about other interest in acquiring these assets. Can you give us any indication of the types of potential buyer that showed interest in Saber before you went for this deal?
So on your first question, I think we have two projects, joint projects post closing. The investment into those projects are, I would not say significant, and they lies within the annualized 1.2 billion capex. Remember, we had 1.443 million capex in the divested assets. On the one-off, sorry, and then we are now saying that we are saving, or we're reducing capex with 1.2 billion. But I think a bit of your answer could lie in between. On the first question on one-offs, well, obviously we are disclosing the non-cash expense, 6 billion in the press release, and according to my understanding, that will be the expense to this transaction.
And just on other interests in the assets, that was the third question.
Sorry, other interests in. Sorry, could you repeat that?
Lars is not giving us a lot of
Other
information.
potential buyers, but this was the one that.
Sorry. Yeah.
Can you give us?
We initiated this process last summer and been running with one of the global leader advisors, Ethereum, a company in London. Been talking to the industry, been talking to a lot of private equity. It's been a lot of interest, especially from on the private equity side. At the same time, it's a very complex business, especially the geopolitical issues that were connected to the business. I think limited valuation of it. And in the end of the day, when Matt put forward a proposal to us, that was actually, I think the proposal that created the most shareholder value. So from that perspective, I'm pleased with this.
Okay, just going back to my first question, sorry, I was interested in when the two combined projects between the divested and retained assets come to market, come to fruition, will you have to pay away a significant amount of the economics of those to the divested assets? So do we need to consider that when we're thinking about this project?
Well, I think on project number one, I'm thinking about we would have the most of the economic upside. On the project number two, I'm thinking about I think the buyer would have most of the economic ups, or not most, but the majority of the economic upside, even though we might recoup our investment earlier. It's also about managing the business risks. So this transaction has been negotiating between my senior management and the buyer and on arm's length. So I would say they are to industry standard. But obviously, these kind of negotiations are it's a lot of details, and it's a very extensive contracts and processes and milestones to have this kind of agreements between parties.
Understood. Thank you, Lars.
There are no more questions at this time, so I hand the word back to you, Lars.
Thank you, Einar. I would also thank everyone for tuning in this morning, and thank you for the support from all the shareholders in a very difficult past 12 months. But now I'm really pleased to look forward into the future, and this morning's transaction is a very important first step into that. Thank you, Einar.
Thanks a lot. This concludes today's call. You may disconnect your lines.
Okay, my friends. Okay, so Lars seems to lighten up a little bit at the end. He says this is now very important for the path we are going as shareholders. So it's really creating shareholder value. I mean, worst case is that Embracer simply can't pay the debt, and it's getting worse, and then they just disappear. The company disappears. Your stock, your money disappears. So, I mean, the market understood that something is going to miss after they were selling this and just to pay down their debt. So there's something going to miss, and this is like therefore already 11% from today. So we are now 15 Swedish krona. So I think we are not over the worst. So I don't know if more divestments are coming, but I think the stock is not over it now. No, stock is not over it now. So, but hey guys, I mean, if you were so, let's say, not smart like me, purchasing more Embracer stock around about here because you thought like, yeah, this sounds like a plan here to buy around 50 Swedish krona. Yeah, well, so I mean, you have to do your own research, my friend. So I can't do this research for you. But my opinion is we might see even lower prices. If it goes up, hey, I'm the most happy person. And for the rest, I would say I'm leaving it here. It's very complicated to really understand if it's going to be good or bad. I don't like the fact that they're divesting companies from the group overall. I feel like as a shareholder that I'm losing something of the company, and I wonder if it's actually possible then for the company to get this talent and to get those projects, the same amount of projects back in. So that's a bit the fear I have, but I don't know what impact it actually has on the stock. So you would now assume it's negative on the stock because it was today negative, but it was also positive for a short moment today. And then some other analysts were probably saying, no, that's not good. Actually, that's not good. And then the stock was selling off. So who knows, guys, what is right here. So long video as always. See you next time. Bye. And this is no financial advice. I'm just a YouTuber. This is for information and and entertainment purposes only. And make your own mistakes, lose your own money. So don't do anything that I said in this video. So please don't invest in any of those companies, especially not in Embracer, because you will lose all your money. So disclaimer over. See you next time. Bye.